Central Florida is not one market. Some neighborhoods are gaining momentum quickly, others are already losing leverage. If you are buying, investing, or relocating in 2026, where you buy matters more than ever because the difference between the right area and the wrong area could mean hundreds of thousands of dollars in long-term equity. In this video, I'm going to talk about the Central Florida neighborhoods that I believe are positioned to outperform over the next several years, and more importantly, why I believe so. We will look at demand trends, infrastructure, lifestyle shifts, pricing pressure, and where I think smart buyers are quietly moving right now. My name is Bent Danholm. I'm the broker owner of Danholm Collection right here in Central Florida, and our focus is strategic real estate representation, luxury marketing, and target marketing designed around how buyers actually behave. Before we start talking about neighborhoods, we need to understand what is actually driving this market. Central Florida's growth is no longer primarily local. A very large percentage of luxury and upper-end buyers are now coming from places like South Florida, the Northeast, California, Texas, the Midwest, and international markets like the United Kingdom and Brazil. And that changes pricing dynamic completely. These buyers are often arriving with significantly higher liquidity, remote income, and proceeds from higher priced markets. They're not just buying homes also. They are buying tax advantages, they're buying lifestyle, they're buying space, they're buying schools, they're buying privacy, they're buying walkability, and they're buying long-term positioning and capital gains. At the same time, inventory across many luxury segments remain at historically low levels. That means buyers are competing hardest in the neighborhoods where this is true, where lifestyle is difficult to replicate, where the land is limited, where infrastructure is constantly improving, and where long-term demand appears to be durable. That is where leverage is building. If we start with pure long-term stability and prestige, Winter Park remains one of the strongest markets in Central Florida. And the reason is really not that complicated. True walkability is a luxury that is very limited. Buyers constantly pay premiums for brick streets, mature tree canopy, Park Avenue access, lakefront lifestyle, and architectural character. You cannot easily recreate that. And that scarcity really matters. What we're seeing right now is continued demand for probably positioned homes that are near Park Avenue, near the chain of lakes, and in the historic core of Winter Park. Luxury buyers increasingly want neighborhoods that feel established and experiential, not just large homes and subdivisions. And I believe that is exactly where Winter Park wins. And the pricing reflects it. Waterfront and premium luxury inventory in Winter Park can easily start at $550 per square foot and very, very easily exceed $900 per foot. And that places Winter Park among the benchmark luxury markets in Central Florida. So who does that area fit best? Well, typically it was established families, executives relocating from larger metros, and obviously buyers prioritizing lifestyle over sheer square footage. And this is not a speculative growth market. This is a long-term wealth preservation market with continued upside because supply is inherently constrained. You cannot make more Winter Park. You cannot make more lake frontage. If I had to point to another area that is stronger in terms of infrastructure-driven growth, that would be Lake Nona. And this is not just residential expansion. Lake Nona is seeing a coordinated economic development. Medical City alone fundamentally changed the trajectory of this area. And if you combine that with the USTA National Campus, tech investments, corporate relocation, healthcare expansion, and continued commercial development, you'll see that billions of dollars are flowing into this corridor. And when billions of dollars are flowing into a corridor or an area, that creates residential demand as well, especially higher income demand. And Lake Nona also aligns extremely well with what modern relocation buyers want. They want newer construction, they want technology integration, they want wellness-focused design, they want proximity to transportation, especially the airport, and they want master planned convenience. That buyer profile is growing. So we're seeing strong demand from physicians, executives, remote professionals, and international buyers in Lake Nona. And we see that in pricing as well, because luxury pricing in parts of Lake Nona now competes directly with many traditional luxury markets in Central Florida. In some estate segments, pricing is already reaching $450 and up, and typically $750 per square foot can easily be reached. That is significant. And I don't even think that market is finished recalibrating out there. If you're looking for what I would call a strong growth and value combination market, I would look very, very closely at Winter Garden and Horizon West. This corridor continues to gain momentum because it solves so many buyer problems at the same time. Buyers can still secure newer homes, larger lots, modern floor plans, really strong schools, and lifestyle amenities without having to pay Windermere or Winter Park pricing. And that matters, especially for move-up families and relocating families. The West Orange corridor is also benefiting from a continued retail expansion, a lot of infrastructure growth, parks, restaurants, and a long-term population migration west of Orlando. So we're seeing consistent appreciation trends here. And that's not just because of some hype. It's because demand keeps absorbing inventory. And importantly, buyers still perceive relative value out there. That creates runway. This is actually one of the few areas where buyers still feel they can secure meaningful upside while entering below the pricing threshold of the legacy luxury markets in Orlando. So for younger families especially, this market makes a lot of strategic sense. Windermere obviously remained one of the premier luxury, lakefront luxury lifestyle markets here in Central Florida. But what a lot of buyers do not initially understand is this: not all lakefront, or should I say waterfront, is created equally. There's a whole lot of difference between canal access, canal front, partial water view, true waterfront, and open water Butler Channel lake frontage. The difference can represent several $100,000 in pricing difference, if not $1 million or more. Sometimes way above $1 million, because buyers at this level buyers at this level are paying for the boating experience, they're paying for privacy, they're paying for the sunset orientation, they're paying for prestige, and they're paying for the long-term scarcity. The Butler Chain of Lakes is infinite. The old part of Windermere is infinite. You cannot create more of it. You cannot expand this. And that creates a true, durable value protection. And you see that very clearly in communities like Isleworth, Lake Butler Sound, Keene Point, and parts of the old Windermere. These areas continue to attract athletes, executives, entrepreneurs, and high net worth buyers that are relocating from tax-heavy states. And unlike trend-driven markets, true luxury waterfront tends to recover quickly because inventory is naturally constrained. This is not an entry-level appreciation play. This is a legacy asset market. Another area I think will continue to outperform expectations is Baldwin Park. And again, this comes down to buyer behavior. Walkability is becoming increasingly valuable, especially among professionals, younger families, and buyers downsizing from larger estates. And Baldwin Park works really well because the environment feels intentional. There are restaurants, there are parks, there are trails, there's retails, and the community is designed around livability and walkability. And buyers are increasingly prioritizing convenience and experience over excess square footage. And I think that trend is accelerating. And you can see it in the days on the market in Baldwin Park remain extremely competitive for the homes that are properly positioned. And because the community has a very distinct identity, buyer demand tends to stay consistently even when broader market conditions shift. So Baldwin Park tend to attract buyers who want structure, community, accessibility, and lower maintenance lifestyle. Every market, including Central Florida, has areas where smart money moves before broader recognition happens. And in Central Florida, I believe Maitland fits that category perfectly. Maitland gives buyers access to many of the same advantages that are associated with Winter Park. You can get chain of lake access, there are established neighborhoods, mature landscaping, there's still proximity to downtown, and there's a strong lifestyle positioning. But you get all this often at a noticeably lower entry pricing than in places like Winter Park. And I think that gap matters, especially when many buyers eventually get priced out of Winter Park and start looking nearby. They want to be in the area, but Winter Park is becoming too expensive. That makes Maitland the logical spillover market. And historically, in real estate, when premium markets become constrained, the nearby markets benefit. That pattern repeats consistently everywhere in real estate. So I think Maitland still has room to recalibrate upward over the coming years as more buyers recognize the value proposition. One thing I do think that buyers need to understand heading into the last end of 2026 is this. The old approach of simply buying anywhere because prices always go up is becoming a little bit dangerous. Long-term prices will always go up, but some neighborhoods will absolutely outperform others. Others that are being outperformed will remain relatively flat, maybe go down a bit, but most likely remain flat. So the market is becoming more selective, and buyers are becoming more lifestyle driven and quality focused. And that means that things like location quality, infrastructure, school districts, walkability, privacy, and maybe more importantly, long-term scarcity matter far more than they did during the low interest rate frenzy we had a few years ago. The easy equity phase is for the most part over. So strategy matters really now. Matters a lot more now than it used to do. So if I were to advise a buyer entering into Central Florida right now, I would focus a lot less on the short-term noise and more on long-term positioning and strategy. The neighborhoods likely to thrive over the next several years are the ones where demand remains durable, inventory remains constrained, infrastructure continues to improve, and lifestyle appeal is difficult, if not impossible, to replicate. That is where leverage tends to build over time. So if you're considering a move to Central Florida, or if you're trying to decide which neighborhood makes the most strategic sense for your situation, please contact me directly. And in the comments, please could you let me know which Central Florida neighborhood are you considering right now? I'm happy to tell you what I think about its long-term growth potential. If this video was helpful, why not subscribe to the channel? We cover a lot of Central Florida real estate, luxury market trends, neighborhood strategy, relocation, and the market dynamics that buyers and sellers need to understand before making major decisions. I really hope you enjoyed the video. Thanks for watching. I hope to see you in the next video. Bye for now.